hey, you can pay $2,000 in rent, or you can pay $1,800 in a mortgage and own the place. Now it's like you can pay $2,500 in rent or $3,500 to own the place. Like, it doesn't look quite as satiable. You're not getting quite as excited as you once were to kind of take on that huge debt and huge responsibility. Maybe it's easier just to rent and have a fixed amount. Don't have to worry about any of the maintenance. And even the rules and regulations seem to be continuing to slide towards favoring tenants, so there's even less risk as a tenant these days as there would have been in the past.
You're listening to the Ottawa Real Estate Podcast with your hosts Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Hello and welcome back to the Ottawa Real Estate Podcast, your ultimate source for everything real estate in our nation's capital. I'm Paul Stevenson, one of your hosts, and as always, I'm joined by the brilliant David Warren and Greg Campbell. If you haven't subscribed yet, make sure to hit that subscribe button on YouTube or wherever you're listening right now. And don't miss out on exclusive content and updates by following us on all social media platforms. We'd also like to give a quick shout out to our sponsors, Centum and Gertin Poirier Law, for their incredible support. Gentlemen, start your engines. How we doing? What's going on? How are we?
Good.
Hi.
Greg's in the glorious yard.
Mm-hmm.
The great outdoors.
Enjoying myself today.
Basking in the sunshine.
I was like, what better place to do the podcast today than not in an office? Somewhere else.
Yeah, Paul and I didn't get that memo.
It's amazing. Yeah. Well, another day. Another day.
That's what's great about technology. It's good and bad. It allows you to get off the chain, but also keeps you on it at all times. You can break free, but you're never quite free.
No escape.
Yeah.
There's no escaping. Yeah.
Yeah. Shout out to the
So, guys. Yeah.
So what's happening? We got a wild market. Lots of news coming out. Seems like there's a huge separation between what buyers are willing to pay and what people are willing to sell at least from what I'm seeing. And I think we're kind of still waiting for that. We're kind of seeing that balancing act still happening. Bank of Canada's announcements this week. A lot of speculation that they may do another drop. I still think they'll hold, but that's just, again, I'm probably jaded just based on all the announcements over the last few years being the complete opposite of what they say, what they're expecting or what the experts expect. So, I think they're pricing in like an 80 to 90% chance of a rate drop tomorrow, rate decrease. And I was saying to Sandra this morning, like if they dropped it 0.5%, I wouldn't be surprised. 0.25%, I wouldn't be surprised. If they held it, I wouldn't be surprised. Like I really genuinely have no idea what they're going to do. But I think that will impact the market, even if it's slightly. We've seen fixed rates come down again, like very nominally, but they're kind of holding where they are. I think also kind of anticipating to see what news comes out of the US and what kind of the numbers look like here in Canada. But seemingly the trend on rates is downwards currently. And I think, Greg, I know you had some stats from out west, but in Ontario, it seems like the days on market is around the same. But the people I'm talking to, the clients at least, it seems like buyers are kind of holding on to what they kind of on that notion that homes always appreciate. So they kind of have that specific number in mind. And buyers seem to be trending more in the direction of, well, this is what the incomes and kind of qualifying show this price to be at for this home sort of thing. So there's kind of this weird gap now between what people are willing to pay and what people are willing to sell at. And I think over the next few months, we'll probably see that gap, get smaller. But yeah, wild. That's a weird summary for me of what's happening, what I'm seeing.
It is, but it's
kind of all over the
true.
place.
They keep commenting on how things like, we have to keep home values high, but we need to build more homes. But we need to get the first time home buyer into their house, but they can't because the home values need to stay high, and then prices like the condo situation in Toronto and Vancouver is absolutely ridiculous. And Paul, so like your comment about that stat that I had from BC, there's this guy I follow, Steve Koresh on YouTube, and he's a realtor in Surrey. In his comments, he was away for 2 weeks and he came back to something that he'd never seen in his career, where he's like, I went to evaluate a condo, and when I brought up all the data to do his review, he found out that there was 316 similar condos on the market, leading to a total of 18 months of inventory, basically. And then he started going backwards into townhomes, etc. And he found that it was similar, like all the way down to like a year of inventory or 14 months of inventory, respectively, for each product. So, you know, there's nothing like that has ever really been seen, I think, in modern times. And, you know, his comment was, between him and other realtors that he works with, the conversations that they're having, there are still people that want to sell who are thinking that they can actually compete against 316 other condos at a price that's the same as what the other condos are listed at. But their house isn't really any better. It's the same, their condo. So it's like, where's the thing? He said that's the biggest problem that they're still having, is that the sellers aren't really understanding what's happening. The ones that are obviously selling. But yeah, it was something like, that's what it was, 316 on the market and 17 had sold in the last 4 weeks. And his clients were trying to sell at the same price as what they were all at. And he's like, oh, sure. Like, we can look at that. But the numbers here are saying that you're not going to want to really look at that. That's not going to work.
You're going to be waiting a while.
Yeah. So that's something that's new. And another thing I wanted to mention is that because of all the news that we're seeing in Vancouver and Toronto lately, specifically, what I'm hearing more of is that they're all making a point of mentioning that Ottawa is a market that does not get impacted the same way as those cities do, which I thought was kind of cool, because they didn't really need to say that. They were saying that Ottawa has a stronger, more stable market than those other metropolitan cities where, you know, they're just getting hit so hard right now all across the board.
Vancouver, Toronto have always relied heavily on investor, you know, the rental market, foreign buyers, you know, when for new immigration, people are flooding to the major cities like Toronto and Vancouver. Whereas Ottawa, you know, we've always said it, and it's kind of always been an ongoing sentiment, is that Ottawa is a very stable market, you know, government and high tech and all that. And obviously it's been diversified as far as industries, but yeah, we've maintained that. And we've seen like our price, you know, when we've talked about us bottoming out on prices in around January this past year, or I guess it was last year that we bottomed out, and then we've kind of rebounded since then. But it still wasn't a huge, drastic decrease like they're seeing in Vancouver and Toronto.
No, I really don't know what's gonna happen there. It's totally bottoming out. Investors, I think any investors and builders altogether, what's going to happen? What's happening, guys? What's happening?
Yeah, and what shifts the market? I mean, we talked about we will go back even 3 years. The demand for housing was through the roof. Like literally, you couldn't sell a home, you couldn't list a home fast enough. Like it was sold before it was even like there was a sign in the ground, because so many people wanted it. Obviously, rates were like, we're talking completely different world as far as rates and qualifying, but people can still qualify for these price points. It seems like the demand is just not what it was, and I don't know if that's just because people, like, nothing's cash flowing. It's, you know, there's not.
I know what it
opportunity
is
for investment.
It's analysis paralysis. There's too much available. So everybody sees something and they're looking for that perfect home, but now there's too much to choose from, so they're taking their time, and then some of them won't even buy anything. They're just going to keep waiting because they're going to assume that something else is coming.
It is kind of, that does make sense. And then you kind of get in that holding pattern, and then, you know, maybe rates do come down a bit. It's like, oh, wow, things improved even just a bit slightly, so maybe we should keep shopping, you know, and then maybe price adjustments and prices come down 1%. So, oh, well, we're trending the right way. Let's just wait, you know, and then kind of it's like a self-fulfilling prophecy of just waiting.
Well, it's, you know, you go to the grocery store and you've got 10 types of almonds for sale, right? It's almonds. Like, which one do you buy? You know what I do? I buy none of them, because I look at them like, this is fucking ridiculous. I'm like, I'm not going to sit here and analyze each one of these boxes by, like, what? They're almonds. You know what I mean? where they're from, how they're packaged. Like, I'm just not going to do it. That's not my style when I'm shopping for food, right? I'm very like, I go in, I know what I want, I know what I'm getting. If there's too much to choose from, sometimes I'll just skip by it. I want lemons. Oh, there's one type of lemon. Guess I'm buying those lemons.
Yeah.
Right? I'm buying those lemons today. Oh, there's the Dole bananas. I needed bananas, buying the Dole bananas.
Yeah.
There's two bananas. There's like two organic bananas and then two like non-organic bananas. You're just like, and then you're like, then
apples
you're
it is,
shit, right? you're like, well, this, yeah, right, exactly. But you're like, which banana? And it's like, what am I doing? It's the Dole. They're always here. Like, that's what you do. That's the same thing with, it's selling anything, right? The less selection you have, the quicker you are to buy, because you want that thing.
Mm-hmm. I think
you've heard it. You've heard it on Torah.
I think, kind of to Greg's point, the analysis paralysis of a lot of supply, but everyone is also taking that time to analyze, because they hear of exactly at the top of the show that you mentioned, the 80 to 90% right now likelihood of a rate drop next, or I guess tomorrow when this comes out, the 24th. There's a possibility it drops another quarter point. So people hear this knowing that there's another announcement. They hear in the news of that, and waiting for it to affect rates. So people not wanting to lock in or wanting to start shopping because they, there's that downward pressure. So again, it's overanalyzing, waiting for when that in their, for buyers of what that perfect rate is for them in order to start pulling the trigger on, what they're looking at purchasing. But they also have so many options as far as supply on the market. So it becomes kind of the two sides to it. They get to analyze an outrageous amount of property right now, at all different price points. And then also they're just analyzing of when is our rates continuing to go down. Okay, well, I'm reading and hearing they're going to go down. So let's wait and hold off. There's still tons of supply. And at a certain point, there will be a trigger point in people's minds of when the rate is low enough for them and that they, get back in the market. And maybe it is a certain point, a precipice where kind of everyone's mental mind shift to just like, okay, now's the time, or because they know, or the mindsets will be like knowing that it's going to gradually come down over time of maybe they aren't waiting and they kind of, time will tell. I think if they drop tomorrow another quarter point, there's a pause and then there's a pause in August. Like, again, how does that change people's mindsets with a continued decrease? Time will tell. We thought people would be swarming. Like we said, the first one, swarm, and it wasn't really the case. It picked up for that 1.5 weeks and kind of fell off again, obviously through the summer. People get back into vacation mode, but yeah, it's really hard to predict.
Yeah, and I think people are seeing their property still as a major investment, and like anything, like if you've ever followed any exchange or specific company stock, if you see, let's say Apple as an example, just because we're talking about fruits, if you see Apple stock decreasing and you've been waiting to buy it and it keeps going down day after day, or at least stagnant, or there's some big news that may be coming out next week, you're not sure what, but it might come out, like you kind of just wait. You just kind of get into that habit of waiting, and then you don't end up even buying the stock because, it's on the way up. Well, let's just see if it comes back down again. Let's just wait and see. So you kind of get stuck in this mindset of, I'm sure there's a scientific term for that, analysis paralysis, but it's kind of like you want to wait for that perfect time to buy. You don't want to get caught, with your hands behind your back, or, whatever term you want to use, trying to be PG here. And, I think, people just aren't sure what to do. Like, they don't know, they don't want to pull the trigger too soon. And, I think a lot of people also are probably converting to renting. It used to make sense.
Yeah,
you look like
I agree.
We compare mortgage payments at, hey, you can pay $2,000 in rent, or you can pay $1,800 in a mortgage and own the place. Now it's like you can pay $2,500 in rent or $3,500 to own the place. Like, it doesn't look quite as satiable. You're not getting quite as excited as you once were to kind of take on that huge debt and huge responsibility. Maybe it's easier just to rent and have a fixed amount, don't have to worry about any of the maintenance. And even the rules and regulations seem to be continuing to slide towards favoring tenants, so there's even less risk as a tenant these days as there would have been in the past. So I think there's a lot of factors, but it's very it's interesting. It's interesting, guys. You know, we're
let's leave it at that.
yeah.
Of course it is. I mean, there's one thing, I'd like to share about Ottawa right now. It's a pretty healthy market. Everything's the same as it usually is. It's moderate to slow right now because it's summer. One thing we do have is a little bit more active listings on the market. We're seeing more price decreases. Like for a quick market snapshot here, in the last 7 days, we had 583 new listings. 32 of those were back on market. 197 were price decreases. There was 9 price increases, 241 conditional sales, 236 sold. 24 expired, 215 canceled. So of those canceled, I'm sure that most of those are part of the ones back on market, although there was only 32. Maybe some of those switched to rentals or just pulled them off completely. Who knows? But there's, the cancellations is higher than normal. But I mean, the decreases, the conditional sales and sold is still pretty healthy.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
So pulling out your crystal balls, gentlemen, let's look ahead 6 months, 12 months. Do we think that this is going to be supply is going to continue growing? Rates are going to stay where they are. We're going to see longer days on market, more supply, or are we thinking that in a year's time, rates will be down lower, things are going to be moving, and homes are going to, stagnate or increase in value?
I
think it's going to stay the same for a little bit.
I think things.
Go ahead, Dave.
No, I was just going to say, all indications, and from a Bank of Canada standpoint and their policy rate decisions, it's on average, they've come down 2.43% over an 18-month period after hitting a peak or once they've started decreasing their policy rate. That's historically what they've done, which is a pretty big, that's a pretty fast drop. That's a year and a half to drop, almost 2.5% on prime. If they drop tomorrow, that's back-to-back months, down 0.5% for adjustable rate mortgages. Obviously, that'll put pressure on fixed rates. I think as those do come down, the demand has not gone away. It's just shifted to staying in their current homes, living with mom and dad, sitting on the sidelines waiting, or in their rental property. Within Ottawa, a lot of the builds have repositioned from being resale builds for condos and things like that to being for rentals. I'm seeing that at least in Centertown, where I am. A lot of the new builds for single family and townhomes have, they've slowed down. They still have to proceed because it takes them so long to be able to get product done, and they obviously need to continue. But I think in 6 months, I think there will be more movement, and I think rates will be down, from when they started in June. I think there'll be, if they do drop tomorrow, like the market's anticipating, I think there'll be another couple of drops before Christmas, over the fall, which will, again, that, I think that will continue to drive demand. We saw it through COVID. People didn't just people magically showed up because the border actually was closed for a little period, but we had such an influx of immigration. But what really drove that was the rates being at an all-time low and people being able to qualify for properties. So as soon as if prime comes down another 1.5%, and same with the fixed rates, that just improves people's qualifying position. And I think that's when they're going to really, there will be that demand, and kind of the supply will be diminished because builders won't be able to build as quickly. Right now they're at a pause and at that standstill. But who knows? Like first time home buyers, there's an incentive that's starting up in a couple of weeks. There's no pricing yet from the lenders, but first time home buyers as of August 1st will be able to qualify on a 30-year amortization for new construction. I anticipate that builders will be targeting first time home buyers for their product because of that, that flexibility to qualify on a 30-year amortization, which shrinks that payment, means that they can qualify for more. So I think that'll be interesting to see whether there's any added interest on new construction for those people.
It'll be interesting to see because it's like a lot of people have to start making moves before it really takes hold.
Mm-hmm.
Like there has to be a big group that starts this whole, like a whole new trend of buying. And it's like we're saying, everybody is just, not everybody, but a lot of people are just sitting and waiting more so than ever. I almost feel like some are just so past, like they're just over it, that they're just going to wait longer than it's even before it's even time for anything to happen. I don't know. I'm skeptical. I'm skeptical.
And then when
the
rates plummet again, like they, as they have, obviously we've been at a high that we've seen, but we'll see rates come back down and that interest pick right back up and rates pick back up or prices rather. And it'll be people get FOMO, which then drives that market.
They will, some will, but I think that a lot of people are just kind of over it. They're like, I'm not buying ever. I'm done. I think there's a wave of humans that are coming in where they're just like, I'm not having it. They don't want to get caught in this thing, although they will get caught in the rental prices, whatever that looks like, but I just think there's a lot of home buyers who are now they're just like, forget it. It's not worth the trouble unless some life changing thing happens. Right. And then they kind of shift their gears again. But I don't know. I'm skeptical on the future of new home buyers.
I would guess with all the upcoming renewals over the next 2 years that, in 3 years' time, rent is going to be up substantially from where it is already today, just to offset those increased costs. Now, I know there's caps, obviously, but I think with a new tenant, you can adjust the price to what the market rents are at that time, right? So I think the turnover, people starting to rent in 2-3 years, people that are graduating university or whatever and getting into some sort of market where they have to rent, those prices are going to go from, 22 average to maybe 3,000 or 32 or it's going to continue to increase. So, I don't think there's any avoiding it. I think this is the fallout of
either way,
the repercussions of the last few years and, all the inflation garbage that we're dealing with and trying to tame that fire. But I had a situation last week where a client was bidding on a property that was, they basically said that they've had 2 offers come in on their property and both buyers basically would not negotiate at all. Like they put in their offer way under asking, the sellers countered, and then just nothing. Like, yeah, no, we're not gonna even resubmit. Like, what? So just that's it. That was the end of the negotiation. It was like, and not even saying like, here's our best and final offer. Just like, let's throw a dart at this, see how low they're willing to go. It's been sitting, and then no counter, no further conversation, just walked away. It happened to them twice. So what does that mean? I don't know. That to me is just like the buyers, again, have no pressure, no urgency. It's kind of like, let's see if we can get something at an outrageous discount and hope for the best,
Yeah, that's the thing. It's the urgency. I feel there's less lack of urgency. And I think that's going to go on for a while.
But you know what, I can't, to your point, Paul, I can't fault the buyers either.
No.
In a case like that, like throw a dart if they're not urgent, let's see if the seller's urgent or what, how pressing it is to unload that property. And if they can get it at a discount because there is supply, or maybe it has been sitting, I can't fault a buyer for even throwing an attempt. The non-negotiation is funny.
Not faulting them, to be clear.
No, but the non-negotiation is funny. It's just more like, it's kind of just like, here's a dart at X amount less than the purchase price. We get it. Great. Also at the same time, even if they got it, but it's, and it's conditional, like, are they even going to move forward? Like, are they just kind of wasting that seller's time anyways? But I think there's a lot of properties that have been sitting for quite a while that I think people should reach out and look, if you're looking for a deal, certainly there are properties that you probably can, but
just shoot for a deal on anything.
Shoot your shot.
Just try. Shoot your shot, bud. Go for it. Go for it.
Article today about Royal LePage. All this speculation. Royal LePage is forecasting a 9% rise in the average home price in Q4. So I'll read this little snippet here. It says, in its latest forecast released last week, Royal LePage says the aggregate price of a home in Canada could reach an annual growth of 9% in the fourth quarter of this year. This would be substantially higher than the 1.9% year-over-year growth rated. 1.9% year-over-year growth rate recorded in the second quarter, but is expected to be driven by subsequent Bank of Canada rate cuts in the second half of the year. According to Real LePage poll results, 51% of sideline home buyers said that they would resume their search if interest rates reversed. The agency noted that the Bank of Canada's June rate cut has yet to significantly boost real estate activity, resulting in a buildup of housing inventory and continued downward pressure on house prices. Canada's housing market is struggling to find a consistent rhythm, said Phil Soper, president and CEO of Royal LePage. Nationally, home prices rose while the number of properties bought and sold sagged, an unusual dynamic. The Royal LePage House Price Survey reported that the aggregate price for a home in Canada rose to $824,300 as of Q2. When segmented by housing type, the national median price for single-family detached homes rose 2.2% over the past year, reaching $860,600. Similarly, the median price for condominiums saw a year-over-year increase of 1.6%, climbing to $596,000. Do you want me to continue?
Yeah,
I want to read this next section too, and we can kind of summarize it all. So it says Canadians feeling worse about their finances, but better about real estate. So it says, despite Canadians feeling slightly worse about their finances, the latest weekly Nanos consumer confidence poll showed an improvement in how they view real estate. The poll that found financial concerns are growing, with a reading of 14.76, down from 15.28 last week, and the 6-year average of 17.9. People are 3 times more likely to say their personal finances are worse rather than better compared to a year ago. The weekly telephone poll included responses from 1,100 Canadians. Meanwhile, optimism about the real estate market is on the rise, with a reading of 47%, up from 46% last week, and long-term average of 40%. I'm not sure what these are, these percentages. Like it's kind of weird numbers. This must be some sort of pricing point. I'm not sure. It says overall, the results show consumer confidence moved down slightly to 53 compared to 53.95. Like, again, I'm not sure exactly what these are averaging, but I guess the point of it is saying like people are stressed about their finances, feeling like the overall economy is hurting, but they seem more optimistic about the actual real estate market, which seems like they'd be conflicting, those two things, you know?
Or they're just optimistic that their equity is going to bail them out of their consumer debt.
Yeah.
Building consumer debt.
Yeah, that's true. Yeah, so it says the Federal Reserve rate cut expectation spikes. So following last week's benign U.S. inflation report, market odds of a rate cut by September south of the border spiked over 90, up from 73% last week. So it says forecasts now anticipate multiple quarter point Fed rate cuts by the end of the year, potentially in November and December. This is again, Fed Chair Jerome Powell said last week that central bankers are making rate cut decisions on a meeting by meeting basis. I don't know. I mean, really, like if the Royal LePage forecast is based on, multiple rate drops, then yeah, I mean, if Bank of Canada drops rates a half point tomorrow and then another half point later in the year, like you would have to assume that's going to stimulate the market. Just even again, optically, headlines, rates are down another half point, rates are down 1%, people are going to come back to the market and start asking more questions, as we saw last time for, it was a week after. And I think people kind of got the memo like, oh, this literally impacts absolutely nothing. Like a quarter point doesn't change much at all. So it didn't really have the same ripple effect that they thought it would. So I think that's a heavy weight that's being heavily weighted into tomorrow's decision. But I'm of two opinions. I think either they're going to hold again and then on the next rate drop do a half point, or they're going to do, maybe quarter point now, quarter point then, or a half point now and nothing next time. But I think we will see over the next 2 announcements at least, a quarter to half point drop. It's just a matter of when and what their motives are. Like, I don't think the Bank of Canada is looking to stimulate the market, right? They're only trying to get that inflation down to the target rate. But with the way things are trending, like the housing expenses, housing costs, carrying costs of these things are one of the major factors right now in that inflation number. So it does actually help their target if they lower the rate. Is that accurate, Dave?
I mean, they're with anything, it's not just all housing, but obviously, to your point, brings down that shelter cost component of CPI. But it's also, the unemployment rate has been coming up, and I think it's up to 6.4% now. Another 42,000 unemployed, full-time jobs added to the number last announcement. So businesses aren't investing. Like, you know, I know we've had the conversation, Paul, but, you know, your son has talked about like people, you know, kids coming out of school right now, like not being able to find summer jobs, or businesses hiring for a lot of different positions. They're running thin because, you know, they're carrying costs of their debt as a business with the bank, with prime being high is too high. So a lot of that lever for businesses to invest as well into their business or growth is dropping bank prime. And that's really the only lever that the Bank of Canada has to try and either slow an economy or speed it up. And it's obviously trying to find that, not overshoot it like they did and not undershoot it, you know, but it's a hard balance to find. So what that number is, I think, you know, is to be seen.
We're just gonna call it waiting and hating. Waiting and hating.
And in the meantime, Greg will be swimming.
For today.
Yeah.
For today. Yeah.
So
Well,
funny,
should we turn this hating around and jump into the mood boost?
Yeah. That's funny. I have a
Boost
video someone just sent me from July 2020 of Tiff Macklem talking about how, you know, people would be financially ruined if interest rates skyrocketed, and they're going to be super low for a long time, and like nothing to worry about. And this is 4 years ago, and here we are.
Yeah.
Okay, Friday. Here's the mood boost. I got 3. I'm already thinking of the weekend.
Friday wrap up.
Yeah, Friday wrap up. Number 1, speaking of inflation these days is really getting out of hand, but that's just my 5 cents. Number 2, I only seem to get sick on weekdays. I must have a weekend immune system. And last but not least, I searched for a lighter on Amazon, but all I could find were 6,000 matches.
It's good.
Yeah.
It's very clever.
I like them.
Oh, pretty good. So, Bank of Canada announcement tomorrow. We'll see what happens. We'll be back next week, Wednesday, 10 a.m., new episode. And I think we're going to pull out a live episode soon. We should. We got to start planning that 200th.
Wow.
The 200th episode. Yeah. And I also have, we're going to have some guests on soon. Talking to a couple guys, trying to lock it down. Heavy hitters. Lots of fun.
Thanks, everyone, for tuning in. As always, make sure to like, subscribe, comment, leave a review. Thanks for listening. We'll be back next week. Bye, guys.
Deuces.
Bye, everyone.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe, because we'd really like that.